When it comes to getting a loan, the terms business loans and personal loans are sometimes used interchangeably, but there are some major differences between the two. For one, business loans are typically much larger in size than personal loans. This is because businesses typically need to borrow more money than a non-business owner. Businesses also tend to have more assets that can be used as collateral for a loan, which makes them more attractive to lenders. In this video, we will discuss the key differences, the pros and cons, and when you may want to take out a business loan versus a personal loan. But first, I would like to ask if you could please like, comment, share, and subscribe below. We really appreciate your help as it helps support our channel to bring you more content for helping you grow your business. Okay, so the first point I want to make is that business loans and personal loans can both help you get the funding that you may need for your small business. Therefore, if you need working capital, and you can get funding from a personal loan or a business loan, either option is a good choice, as long as it makes financial sense in your business. What are the differences between a business loan and a personal loan? One of the main differences between the two types of loans is the way lenders determine if you qualify for the loans. Business loan qualifications are based on either your business credit and the income you are generating from the business, or it is based on your business credit, your income, and your personal credit combined. Lenders will also want to see that you have been in business for some time and that you are making substantial consistent revenue. Qualifications for a personal loan are based on your personal credit history, how much debt you have, and your income, which may include income from your business as well. While personal loans can be used for business expenses, business loans cannot be used for personal expenses. When it comes to business loans, they are typically much larger in size than personal loans. This is because businesses often need to borrow more money than individuals to start or grow their businesses. In addition, businesses usually have more assets that can be used as collateral for a loan, making them more attractive to lenders. Also, business loans tend to have shorter repayment terms than personal loans. This is because businesses typically have a higher income than individuals, making it easier for them to repay the loan in a shorter period of time. Another key difference between business loans and personal loans is the purpose for which the money is borrowed. Business loans are typically taken out for business-related expenses, such as purchasing inventory, expanding the business, or covering operating costs. Personal loans, on the other hand, are usually taken out for personal expenses, such as consolidating debt, funding a vacation, or paying for home repairs. However, there is nothing stopping you from taking out a personal loan to use for business purposes. Especially, if you don't qualify for a business loan, or if you are just looking for more working capital. When to consider a business loan? If you have an established business that meets the lender's minimum criteria, a business loan is an excellent financing option. Taking out a business loan will help you build your business credit history, which will make it easier to get even more funding in the future. Keep in mind that business loans can only be used for business expenses. So, if you need money for personal expenses, in addition to your business expenditures, you should consider taking out a personal loan. There are many different types of business loans available, including startup business loans, equipment financing, working capital loans, SBA, as well as merchant cash advance business loans. So, the type of loan you get should be determined by what you need the loan for. When to consider a business loan? If you are a business owner, there may come a time when you need to take out a business loan in order to grow your business. A business loan makes the most sense if you have an established and profitable business, you need it for business purposes, you have good credit, or if you are looking for larger amounts of working capital. There are some pros and cons to consider when deciding between a business loan and a personal loan. Let's take a closer look. What are the business loan pros? The pros of taking out a business loan are as follows. 1. You typically get longer repayment terms. Although this is true with traditional business loans, it's not necessarily the case with alternative business loan options. 2. It can help you build your business credit, which is always beneficial. 3. You can expect to get higher loan amounts than you would with personal loans. Next, let's take a look at some of the business loan cons. One disadvantage is that there is some time in business requirements, which can disqualify many business owners immediately. Also, the business needs to show consistent and substantial revenue coming into the business. Finally, you may still be personally liable with a business loan, depending on the type of loan. When to consider a personal loan? Personal loans can be a great way to fund a startup business. It can also be a viable option if you have an existing business but don't have sufficient business revenue or the required time in business yet to qualify for a business loan. A personal loan can definitely help you to grow your business. Although it won't help build your business credit, it will give you the money you need to keep your business on the right track. If you are a startup or established business with good personal credit, need the money for personal expenses, or simply can't get a business loan, then a personal loan is a good way to go. Now, let's look at some of the pros and cons you can expect with personal loans. The first pro with personal loans is that it is easier to qualify, especially if you have good credit. Second, you can typically expect to get lower interest rates. Third, can help you with your FICO score. And finally, collateral is not generally needed with personal loans. So what are some of the personal loan cons? 1. It does not help you build business credit, only helps with your personal credit. 2. You can expect to get smaller loan amounts as opposed to a business loan. And finally, you should be aware that you will be personally liable for the loan. So, which type of loan is right for you? It really depends on your specific needs and circumstances. If you need a large amount of money for business purposes, then a business loan is probably your best option. However, if you only need a small amount of money for personal reasons, then a personal loan may be the better choice for you. No matter which type of loan you choose, be sure to make all your payments in full and on time. Doing so will help you build a positive credit history, which can make it easier and cheaper to borrow money in the future. If you need help in deciding what type of loan is best for you, please contact us at 877-235-0672 or visit our site in the link below. Our loan specialists are happy to assist you. Again, call 877-235-0672 or visit us at firstchoicebusinesscapital.com.